short of it is...
Absolutely. How about at the end of the day, do you do anything? Like, I'm really fascinated by rituals. Yeah. Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Good evening and welcome to this very special Rask Live. It's actually daytime, my time, because I'm recording this during the day, because at the time that you might be watching this, like 6 p.m. on a Wednesday night, I might be off at dinner. So I've decided that I might have to record something in advance, as they say in South Australia or over in the Pilbara region. But in Melbourne, we say in advance. And in any case, tonight I've got a very, very, very special guest recording with you featuring Dicker Data's David Dicker. And we'll be hearing from him in just a moment. But I know that many of you can't go without this week's joke. So I've got a few slides ready to go for you. So just on this here, Rask Invest is an upcoming webinar. For many of you that want to learn more about what Rask Invest is and why I've been working on it for 10 months, you can head to rask.com.au/invest and you can find out more about what I've been working on for 10 months. In short, basically there's a new service that we're opening called Rask Invest. It's a throwback to an old name that we used to have. And this is basically something, it's the biggest step in our business today. And basically it's a strategy that maybe you think, and let me set the scene for you. Maybe you think, well, hey, Owen, this guy that I've been watching for 18 months seems to know what he's doing. I kind of trust the Rask name and the Rask brand. I should maybe have a look into this. Well, this is something that I would encourage you to have a look at because it's the biggest step we've ever taken with our business. And it's a chance for us to help more people invest, whether it's family members, whether it's friends, whether it's colleagues who need to invest in the stock market or all markets. And you think, well, maybe I trust the Rask brand and I trust Owen and the team to do the right thing, long-term investing, low cost, diversification, transparency, all on display. So Rask Invest is a new service that will have both an app and an online portal for you to invest directly with Rask and directly with me, and it launches in the next few weeks. So head over to rask.com.au. You can register your interest in this button. You can see a screenshot of what the app will look like, and you can go on the list and you can also review our PDS, the PDS, Rask Invest PDS here, as well as the target market determination, which is obviously what everyone should read before investing. But you can learn about what we've been building, why we're using ETFs for the core of our portfolio. And if you register your interest, you can also book, there will be a limited number of opportunities, but you can, if you register your interest, then you can go on the list to have a direct chat with me one-on-one, because I will be doing some one-on-one calls as part of the launch of Rask Invest as well. We had 1,100 investors give us their feedback on Rask Invest and what it should and shouldn't be, and how we should approach it. And I'm super excited that it's going to be launched in the next few weeks. We'll be doing the webinar, the calls, and I've already had so many people reach out and wish us all the best and say that they're going to invest with us, which is absolutely just amazing. So there's a video here at the top of the page as well, which you can click on. I'll give you more information, but otherwise head to rask.com.au/invest and be sure to register your interest. That's the best way to stay up to date, especially if you're a Rask member. Okay, so if you haven't already figured this out, we go live every Wednesday. Even this one, which is pre-recorded, it is live every Wednesday. So you can subscribe, whether you're on the Australian Shareholders Association, on Rask, or on Selfwealth's YouTube channel. Oops, pardon me as I hit the mic. You can subscribe and you'll receive notifications that we are going live. So for example, here You can see there's a big thing that says subscribed, and then it says subscribe. You click that little button and you get the bell. That means you'll get notifications if you've got the YouTube app on your phone, for example, like I do. We've got nearly 20,000 on Rask now. We get about 700 to 1,000 people subscribing every month for free content, podcasts, this sort of stuff. Selfwealth and ASA are growing as well, which is wonderful. So why not subscribe? Okay, here's the sad news that I've got for you this week. My obese parrot died today. Terrible news. Mind you, it's a huge weight off my shoulders. That's my joke for today. So sad news, my obese parrot died today. Mind you, it's a huge weight off my shoulders. Let me know what you think in the comments. I'll probably be in the comments, to be honest, tonight. So you can still shoot me a message or give us a score out of 10. Remember that Rob from Selfwealth is also often in the chat, so you can say good day to him and comment away about the topic that we have tonight. So tonight we've got Dicker Data CEO, Dicker Data Chairman and founder, David Dicker. We talk about fast Ferraris, fast cars, and big dividends because many of you will know that this is Dicker Data since it has been listed on the stock exchange, and you can see here it's up 4,670%. So what's that? Is it a 460 bagger? Is that what that is? Or is it a 46 bagger off the top of my head? 46 bagger. But what's absolutely incredible about this is that it's managed to do that while also paying out 100% of its profits as dividends. So it pays out 100% of the profit it makes as dividends. So it provides a regular stream of cash flow. Incredible, actually incredible. And so we can see the share price back then was 24 cents. Let's quickly jump into market index. Let's have a look at the latest dividend payment, actually like the dollar value of dividend payment. Now, where are we? We can see here, so we can see quarterly dividends. It's paying, it looks like it's paying more than its original share price in dividends every year. So not only is it a multi-bagger, a massive winner for people, it's also paying out more in dividends than the original share price. Absolutely unbelievable company and story. And so this conversation that we have with David tonight is going to be about, and there's another slide on this, there's a conversation that we're going to have about Dicker, the business, about his story, which is just frankly remarkable, and how he got into the business of selling computer hardware, like computers, PCs, all this sort of stuff, software and whatever became Dicker Data, and where that idea came from and the trip that he took to the United States to start it. But we also cross between his professional life and his personal life, and how he kind of spends his time and his money. Now, my understanding is he's one of the top 10 collectors of Ferraris in the world, and he's a huge automotive fan and fanatic and passionate race car enthusiast, you could say. So much so that David's bid to get a team, his own team, into the F1, the world's #1 racing organization and league. He's already got, I think it's F2, F3, F4, I think from memory. But we recorded this podcast probably a couple of years ago, and this should say David Dicker, not Chris Bates, that was last week, David Dicker, Dicker Data. We recorded this a few weeks ago, and I think it was only a couple of days after he got the news that his team would not be admitted into the F1. And you can find out why in this conversation with full candor, why that is probably a mistake by the F1. And you can hear all about his passion for making fast cars, automotive, why I think we even talk about why he has a private jet and all these wonderful things that we talk about with David. He's very candid in the way he goes about things. And we also talk about the business, what you should track if you're a shareholder or investor looking at Dicker Data. So, you know, how is it able to pay 100% dividends and still grow? Does it make sense? Like, how does the math stack up? So we talk about that and what you should be looking at, how he's fostered the team. So much in tonight's conversation that if you are in the chat and you do settle in with a nice glass of red wine, drink responsibly, or a pasta, eat responsibly, or something like that, and you sit here and you think, wow, this is incredible, go and have a read of the annual report on the Dicker Data website or using your Selfwealth account or wherever you get your annual reports, and have a look at what actually goes on under the hood. And you might want to pop it on your watch list. So in the coming weeks, we've got obviously David tonight, but Plant One, I know you're watching, I know you're listening, not in a weird way, you're just watching and listening. Shout out to you because you reached out to me on Twitter this week, and it prompts me to go and get in contact with Mike Kemp, Dr. Mike Kemp, who is the author of the Ulysses Contract and a former analyst at Barefoot Investors Blueprint. Mike is he's just a national treasure, honestly. Like, he is a wonderful, wonderful investor. He's a brilliant communicator, and he is so exceptionally well read. He's probably, this book, The Ulysses Contract, I think is the best investing book from Australia, like within the Australian context, that I've read at least as long as I can remember. I'm sorry to everyone else that's been an author or has written a book on investing in Australia, but this has got to be, at least for me, the number one book that I've read this year, maybe even last. Like, it's just unbelievable for anyone that's interested in long-term investing and what actually works in the stock market. It's a game changer. So go and read the book. Where is it on my desk? I think I've put it in the other room. But go and read the book, pick it up from Booktopia or Amazon, and then come to the Rask Live in 2 or 3 weeks, and you can ask him some of your questions. We're going to get him to go through about 4 or 5 things from the book that I thought were just profound, and then we're going to answer some questions. We've also got many other guests coming up. In fact, just after I record this, I'm catching up with someone who I hope she will be on the show in the next few months as well. So there's so many great people coming up on Rask Live. I just don't have time to tell you about it today, but tonight we've got David Dicker from Dicker Data. So we recorded this a few weeks ago, originally for the Virtual Investor Summit for the Australian Shareholders Association. It's a wonderful conversation that first appeared there. I know hundreds of you also attended that summit online. Thank you to the ASA for putting it together. But tonight's conversation is really about getting inside the mind of an investor who likes to keep things simple, who has a very clear view of the world and how things should be done, and then just going for it, talking about personal life, professional life, financial performance, operational performance, competitive advantage, all of that. This is just a real kind of like exploration, I could say. So I hope you enjoy it. And please let me know in the comments if you watch this after the fact or in the live chat. Please let me know because I've got about 4 of, I'm very blessed. I've got about 4 of these in the bank or just sitting there ready to go. So if you want to get more of this type of thing in your Rask Live life, let me know, because there's more to come. All right, without further ado, I'm going to hand it over to myself in the past tense, but future self, I don't know how that works, and David Dicker, the chairman and founder of Dicker Data on the ASX under the ticker symbol DDR. Bye for now. David, thanks for taking some time to chat with me. Really appreciate it.
Yeah, no problem at all.
I bought a Tesla recently, and I'm not a cars guy, nothing like you are. I'm more of a motorbike type of guy. And I've got to say, this road car, in my opinion, from my very limited understanding, seems to have changed the game. I'm curious to know what you think either of the cars or of the company.
Well, I like Musk as a person. He's got a few crazy foibles, but in the overall scheme of things, I certainly like his values and the way he goes about things. But the problem with the cars, and look, we've done a lot of development work here on the electric car side as well. We've got a 650 kilowatt motor that's the size of a paint can, and a lot of stuff there. But the biggest problem that the electric cars have got is that there's no excitement or passion in the electric car because there's no sound. And look, some of the cars, I've got a ton of cars, but some of my most favourite cars are old Fords with, loud exhausts and not much interior trim and all the other stuff. And the Ferraris, of course, again, most of the Ferraris have got aftermarket exhausts on them, and they provide a level of entertainment that you're just not going to get in an electric car, and it's a massive issue in that regard. The problem is the electric cars are great as a transportation device, and of course that's what the government wants, because especially in Australia, the government doesn't want you to have fun in a car. They really don't at all. They want you to consider a car purely as a transportation device, and the idea you're going to have fun in it's just something they don't want at all. So that's really why I see the issue with it. From a transportation point of view, it's a good solution. The electric motor is vastly simpler than the petrol engine, and they're much cheaper to make. They're going to last longer, blah, blah, blah. The only real issue, of course, is the batteries, which are a nightmare, and batteries are going to be much more of a nightmare going down the track because everyone's had experience with chemical batteries going back as a kid. And because there's such a strong media push for the electric cars, you don't read a lot of stories about the issues with the batteries because they don't want to talk about it. But the batteries are not going to last, and they're going to be super expensive. Look, I just give you an example. I got a 488 Challenge race car, and I bought this car in, I think, 16 or 17. So, and it's done about 8,000 kilometres of racing, and it's had a lot of use. And it's got a lithium battery on, for the onboard start battery. And we put the battery charger on it all the time. But anyway, cut a long story short, that battery's died after, 6 or 7 years. And the quote for a new battery from the agent was 5,500 New Zealand. And we managed to just get a replacement, in effect, battery, but it's still $2,500. And the battery is like, it's only just big enough to start the car. It's like a starting battery, just like in a regular car. So when you scale up to the batteries that you need to run the cars, the costs are just, going to be really high. The battery packs are not going to last too long, and they're going to be a massive issue, and it's going to be a big problem.
So the Tesla community kind of has this view that, and in the US in particular, that it's about 8 years useful life. They guarantee up to 80% of like new. And they have reduced the modules and the battery packs inside them. But I've often had this question, like, what happens with the batteries after, say, you do discard them or you do need a new module? Like in your case, was there any opportunity to reuse that, or like how do we solve that as a manufacturing industry?
Well, obviously, that can only be solved by a very sophisticated recycling operation that involves taking them apart and getting out the various things, and that's going to be very expensive and difficult, and not something that the end user can do. So, look, the real issue is, like with all these things, and the older you get, the more obvious it is that everything's got a political agenda to it, and the electric cars are no exception. And the other thing that you notice about, like, say, with climate change talk, is that most of the focus is now on private cars. Oh, we've got to go to electric cars to save the planet. Well, the private car is about 4% of the emission base. So it's just completely irrelevant. But, of course, it's something that's easy to attack. It's an easy media story. And, it's just crap, really. I mean, like it's not rational. It's not addressing the real problem, which is power generation. And the real problem with the power generation, of course, is that, wind and solar is great, but you haven't got a baseload duty cycle capability there. And you absolutely have to have that. Now they're going to solve that with, a shed load of chemical batteries? If they could find something that was a better chemical battery or a better battery with a completely different technology, of course it'd be world transforming. But we're nowhere near it, that I'm aware of, and that's the real problem. But the real issue you've got is that you can get about the same energy out of 40 litres of petrol as you're going to get out of a 400 kilogram battery pack. And that's the real issue. Like, the energy density of petrol is just far ahead. And if there wasn't so much politics in the whole thing, you could just say, look, we can transform most industries and housing and all the other stuff to various renewable energy things, but let's just keep petrol for transportation because it's basically a better bet. But they're not going to do that because of the politics.
It's almost like, you're right. It's a political cycle.
Well, look, if they shut down Australia, why don't we just shut down Australia, give it back to the Aborigines, and we will have made a great sacrifice for the climate. But of course, no one's going to do that. And even if we did do it, it just wouldn't make any difference. We only make 2 or 3% of the output, and it just wouldn't make any difference. And yet, as compellingly logical as that is, it doesn't have any impact at all, and everyone's still going on about, oh, we got to do this and we got to do that, and it's completely futile. I find it fairly amazing that people can even be so irrational, because until they stop emissions in India and China, nothing that the rest of the world does is going to make any difference. It's as simple as that. And everyone who's got any brain cells at all knows it, but yet they act as if it's not true and that we should be doing all kinds of other stuff. Like, it's frightening irrationality.
This conversation is going to segue and flip-flop between Dicker Data, the business, and what you've achieved, but also your pursuits. I'm curious. There's a question that I have for you, which is, so you've amassed this wealth, right? You've been super successful in business, and this relates to what you were just saying. Do you think that there's some type of responsibility, say not just for people like you, but also for people like me who are a minnow, right? For people like us that have the ability to make conscious choices around what kind of cars we buy, what problems you try and solve. Like, do you think humans and our society has a responsibility to do that?
I'm not a massive fan of the whole virtue signalling type of thing. And the other issue, look, one of the things that irritates me about all this stuff is that we are living in the absolute best peak time of whole of human history. The living standards are better than it's ever been. And look, I'm 70 years old, so I can remember back, 50 years with ease. And people are so much better off now than they were even 50 years ago, let alone 200 years ago. But yet the way they whinge and howl, you'd think that, the end of the world was imminent. It's just crazy. That's the first problem. Like, when was the last time you saw a science fiction movie put into the future that didn't portray the future as a dystopian hellhole? They always do. They always do. And yet there's no way that's what's going to be the case. You can be absolutely sure of that, because human progress is just going to move it forward, and it's going to be the complete opposite. Yet you just get this large percentage of people in the West who just basically want to shit in the nest. It's some kind of psychological, I don't really understand it, but and it's very prominent in the media. Constantly, we're shit, we're crap, blah, 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 this is wrong, that's wrong. But in reality, we're living in the best times that we've ever lived in.
I think that's worse in Australia than it is in New Zealand. And I think it's worse in New Zealand than it is in the United States. That would be my assessment. Like, I think we've got you said it, we've got a shitload of tall poppy syndrome, particularly here in Australia, where we don't champion success. I think we shoot it down. It really frustrates me, because if you look at innovation, it's people who take risk that pushes those things forward. And that's what I mean. Like, for example, like with the whole Elon Musk thing, which we were just mentioning before, like, he came out with Starlink, and I knew that wasn't as effective as my NBN connection fiber to the, curb or whatever it is. But I bought the Starlink anyway, because I wanted to buy it. I wanted to see how it works. And I wanted to also play a role in helping that technology and supporting that technology, even though I didn't have to. Does that make sense?
Yeah, sure. Although I must admit, I'm not as virtuous a person as that. We actually use it here because in New Zealand, obviously, because of the dynamics of the country, the internet can be a little bit tricky when once you get out of town. And, we found it to be pretty good. To be honest, I talked about a system like this with our guys inside of Dicker Data 10 or 20 years ago, but obviously we didn't have the money to put up all the satellites. I mean, it's a no-brainer for sure.
Yeah. New Zealand's got Rocket Lab, right? So there's a lot going on that's trying to be involved in that space race. Okay, so I mean, there's a lot I want to talk to you about, but before Dicker Data, you grew up just outside of Sydney, if I'm not mistaken. Feel free to correct me on anything as we go. And you weren't, as far as I understood it, you hated school. That's the quote that I got from the AFR. You thought it was like prison that you could get to go home from at night.
Well, that was high school. I liked primary school, But, I didn't even realise in primary school that you were supposed to study. I never even studied for the exams. I just showed up, and then right at the end, someone was telling me about how they'd spent all weekend, and I thought, what are you doing? So, primary school was great, but high school was crap, and
Yeah. Did you have any fascination of for computers or technology at that time?
No, I only got into computers completely by accident, and as well, I was never one of these entrepreneur type kids. I was never, honestly, I didn't really care about money when I was a kid. I can remember having a part-time job when I was probably 10 or 11, putting stuff into mailboxes for 2 hours every afternoon after school. And it was taking up all the free time I had. And I was getting next to no money probably anyway, so I gave it up. So no, I was never one of these kids that was, the 5-10-year-old entrepreneur crap. And I only got into computers because I started doing this stuff in my father's business, and we could see that these computers were going to be the way to go. Look, it was so bad. I wrote this software that had mathematics in it, trigonometry, and I had to dredge out all my old high school textbooks and relearn the stuff that I never really learnt when I went there to be able to do it. No, I didn't. The only interest I had in high school was sailing.
Right. That's interesting. Do you sail now? Because I know you're on the plane.
I used to, but I sold my boat. I had it in Sydney, but it was difficult to get over and whatever, so it's gone.
Yeah.
And I sort of thought about getting another boat, but really the opportunities to use it are so limited that it's not really viable.
Yeah. You said in a Forbes interview that you did that you don't really enjoy doing things unless they're very hard, if not impossible, like they're considered impossible. I imagine in the early days with programming, with programming in the early days, it would have been bloody hard. Like today, you've got like all these, things that do it half for you. But if you weren't that interested and you had to dust off the old textbooks, I imagine that would have been bloody hard.
But once I got into the computers captured my imagination, and it was great. But programming was completely different. And I had to teach myself. I didn't have anyone to do it. But especially in the early days, so everything was very well documented. And one of the things that you can say in favour of the Americans is that they do document their stuff exceptionally well. So basically, if you can read and you're not a moron, it's pretty easy to teach yourself this stuff. So I did that. But it was programming at the low level, like assembly, the machine code level.
Which is, for most people, that's something that they'll never even look at.
Most people don't even understand any of that stuff because what they call programming now is so far above that it's just crazy stuff.
Yeah, it's so high level what we do now compared to that. So my understanding is that your old man had it's like a truss business, like a roof truss style business. Is that correct? Yeah. And sorry, go on.
He started out as a builder after the war. Well, he was a barrister. He didn't like the law, so he started building with his father, and they got into making the equipment for making the roof trusses. So we used to stamp out these metal plates and make the machines to, press them together. And that's what we did. And so all those pieces of wood had a certain length and angle to them. And every house is different. And there's only 20, 25 trusses in a house. So in the old days, they just sort of lay it out like with a pattern, which is very slow. And we decided our consulting engineers decided to use these programmable calculators to work it out, and we decided to buy one so that we could just keep an eye on what they were doing because they were megabuck expensive, and I was going better with than they were. We just took it over, and that's where it went, and then.
If I'm not mistaken, your old man sent you to the US to get some computers and bring them back so you could use them. Is that what happened? And then what was the story from there with the distribution?
I went.
Oh, right. Okay.
I got involved in my father's business because my parents wouldn't, in effect, let me alone and just let me do whatever I wanted to do. Like when I was in high school, I was in fifth year, 17, and I wanted to leave high school and apprentice as a sailmaker because, I was sailing, and they wouldn't let me do it. They wanted me to go to university and all this other crap, and I didn't want to do that. And I did this refrigeration mechanics apprenticeship thing, which I found as dull as dishwater. And then my father said, "Oh, well, look, why don't you take a job working in this plant that uses our equipment in Adelaide, and maybe we can get something out of you, blah, blah, blah." I went down there for about 6 months. They offered me the job to manage it, but I went back and basically I just took over my father's business. Like, he was still doing the day-to-day stuff, but in terms of the strategy and all the other stuff, Fiona and I just basically took it over, and my father was old and tired and he didn't care or stop me, and he wasn't like probably Rupert Murdoch where he was, so we started buying these computer magazines because, you could buy these computers in Australia and you could see all this stuff in America, and then we just sent off messages to America and lined up stuff, and I flew to the States with a bit of money and bought machines and brought them back and took it up from there.
How did it go from that then to selling? Because I remember in the early days you had some, I think it was like I don't know, I read somewhere it was like you wanted to sell 10 computers a month or something. I can't remember what the figure was. How did it go from that? So you just literally bought them from the States, brought them back here, and you started selling them?
Well, we needed the computers for this software that I'd written for my father's business, but we only had 40 fabricators, so we had a very small customer base. But it was obvious that these microcomputers were going to be a big deal, and it was obvious you were going to be able to sell them. So we could see that right from the start. I mean, a blind man could have seen that. So we just started to sell them as a regular business, in effect, and it outgrew what I was doing there pretty quickly. And then we just moved out to another building and just took it up from there.
In the early days, you were selling direct, right? You were selling direct to people that would buy the computers, but that changed, right?
We sold about half of the machines to end users directly, and we sold the other half through a dealer channel that we built up pretty quickly.
Yeah, right.
And then eventually we got out of the end user sales after a while.
Yeah. And is that because, was there, like, in the early days, could you see something happening, or was it just like messy because you're dealing with retailers or selling to customers? Like, it's just messy?
Well, it was different because the end users were almost all technical people that had a very clear understanding of the programming and all the other stuff, so it wasn't much of an issue. And obviously dealers, well, they just sell to whoever they sell to and they manage it, so we only had to supply the equipment, so it's all pretty straightforward.
Totally unrelated to this, David. I actually just remembered something. You mentioned the sound of the electrics before, the electric cars. I actually love the sound of the electric winding up because it reminds me of a plane taking off.
Yeah, I agree. Our electric motor runs at 25,000 RPM.
Oh, right.
And I still think there are some possibilities with it, but they haven't been explored to any great extent, and they're going to have to be if you want to get success, because the sound part of the car is just such an important part of it if you're interested in it. And I guess the only thing that maybe is in favour of the whole electric car is that it'll completely separate out the enthusiasts from the people who just want to get from A to B.
Can you tell us a little bit about rodent cars for people that aren't familiar, and particularly the type of cars you're making? Because I was looking at the specs before and I was trying to think to myself, I think it was like 0 to 100 in, I'm going to guess, I can't remember, it was 2 point something, and interestingly it was only like 700 kilos or something.
Well, the car that we build's not really a 0 to 100 mile an hour type car. Like it's a car for the track. It's an open wheel car, similar to an F1 car. Not quite as quick as a current F1, but not that far behind. And it's built for the track. So,
totally
but we are building a new car, which will be a 2-seat closed car, And we are going to build both road and track versions of that, and we'll probably build both electric and petrol versions, at least on the road. We'll probably only use the petrol motor for the track. But
Hey, so I know that you were thinking of this for a long time. In fact, I've heard you say it was something like 10 years, and then it was only around 2016 or so that you started to take it really seriously. I'm just really interested in this idea of, like, that's an ambitious target to try and build a car that could get into the F1, right? First of all, that's people will hear that and be like, well, surely like Red Bull, McLaren, all these people, the organizations are looking at it thinking, how can anyone else do this better than us, right? So what was like the first step? Like, did you have to get a team? Because if you did, how did you find them?
yeah, we started with a few guys. I mean, I'd done a fair bit of work on the project just myself because I designed the F-Zero, from scratch.
Oh, right. I didn't know
I
that.
got to a stage where I had enough money that I figured I'd be able to fund it no matter what, which is how you've got to be. You've got to be in a position where whatever you have to do, you can do it. And I was in that position, and so I thought, well, I might as well do it. I'm not getting any younger, and I've always wanted to do it, so let's do it.
And so, like, you're not day to day involved. That's my understanding with Dicker Data. You're CEO and chair, but obviously you've got some wonderful team members, which we'll just talk about in a moment. But how did you go and find the people that you would need, the engineers, like just anyone? Like, how did you take those first steps?
Oh, well, you advertise and you talk to people, and we recruited guys from the university in Christchurch initially, and we still have a relationship with them, and we know guys there, and you just cast around, try to, like, it's not easy, but
did you have to steal talent for that? Like, take talent from somewhere else?
We mostly started with young guys that were mostly graduates or whatever. We don't have a lot of real experienced guys, which, to be honest, is probably a mistake. We probably ought to get a few of those.
Because obviously the technical things are really important, but also is that real experience. Because I would guess, David, that those types of people who you want, if you're taking them from somewhere else, would cost millions of dollars. No.
Well, look, there's very little racing car work done in New Zealand or even in Australia, and there's plenty of guys who'd like to do it, and there's tons of Australians and New Zealanders that have gone to Europe because that's where they had to go to work in it. So it's not as hopeless as it sounds.
Right. And I know you've got like a track at home, and you have all the facilities there. Why did you decide to set up the facilities, say, in New Zealand versus? I know why you didn't set it up in Australia, for what it's worth, but maybe that's worth talking about quickly. But why not Europe or North America or something like that?
Well, I probably would have been better off to do the project in Europe or the UK, to be honest. But the problem was that my business was in Australia, and it's just too far away. I mean, it's a 2.5-hour flight from New Zealand to Sydney.
Yeah.
So, and the time zone is not much of an issue and everything. So it's still viable. And I was never going to be like most of these guys that do these projects where they put everything they've got into it and end up with nothing. I didn't want to end up like that because, there's nothing worse than being old and poor. You want to avoid that one. Yeah. So doing it in Europe was never really an option. I would have had to go and live in the UK or you'd have to live in the UK because I don't obviously speak French or Italian or German, so you'd have to do it in the UK, and it'd probably be the best place to do it. And it's just too far away, basically, to be sort of viable because, it's a very long flight from Heathrow to Christchurch, no matter which way you do it, and you're not going to be able to do it. It uses up to like a return trip. The amount of time that it uses up sort of makes it difficult to only be in one spot for a week. Like, look, 1 year, I think it was when we were doing the Express Data thing, I did 30 or 40 trips between Australia and New Zealand.
Wow.
because I was a non-resident of Australia, so I didn't want to spend any more time there than I had to, and I didn't want to anyway. And so, like, that's a lot of flying, and it allows you to get a lot of stuff done. And if you were trying to do that from Christchurch to London, or even Sydney to London, you just couldn't do it because you just can't. So
I heard something. I don't know where I heard this. Correct me if I'm wrong. I heard that you like to be within 90 minutes of your plane at any one time? Is that true?
Oh, well, it takes an hour and a half to get to the plane from my house.
Okay. Why did you get your own plane? Is that just pure flexibility? Like you can just jump on a plane, go wherever you want at any time?
Well, getting a private jet was something I always wanted to do. I used to, where the private jets sit out at Mascot. Well, I live down south, so every time I went to the airport, I'd virtually go past them, and you're always looking at it and thinking, this would be great, not going to be possible, but, blah, blah, blah. And look, the thing about the private plane is that you've just got a level of flexibility that you're not going to get with the commercial flight. And I was an Emirates flyer, and I was on their IO program, so that's their highest level of whatever. And it's absolutely fabulous, but you still don't have the flexibility you've got with the private plane. And even though you're flying in first class and it's fantastic, it's still not the same as when you're flying on your own plane. And it's just a vastly better way to go. And look, the private plane flies higher and faster than even the A380. And so, like I get from Sydney to Christchurch usually in 2 hours and 20. I get from Christchurch to Sydney in 2 hours and 40. And of course, the plane just noses up to the FBO there at Mascot, and I got a 10-metre walk, and I'm in the car and I'm gone. I show my passport to the customs guy, and that's it. And same on the way out. So you just can't, beat it for that. The only negative, of course, is the astronomical cost.
Yeah, I heard you say that you have to have 3 pilots for this, basically, or like a pool of pilots, which cost you, I don't know what you said, something huge. But I guess once you get to a certain point, right, it's not, which you're at, it's not really that type of trade-off, is it? It's more about how do I want to spend my time rather than how do I want to spend my money?
Well, look, you can't justify it in terms of the cost, obviously, but, what's the point in busting your ass and making a ton of money and then dying with all that money in the bank? I mean, that's what my father did. Like, my father made money, not anywhere near what I've done, but he because he was brought up in the Depression, he just didn't really enjoy spending his money. And, he used to say, oh, yeah, but I can buy anything I want. And I'm sure he could, but he never did. And I was always telling my parents, I said, don't bother leaving me any money, just spend it. But they didn't.
He was a prisoner of war, wasn't he?
Yeah, he spent 3 years in Germany.
Yeah, wow. I guess that would do things too. Like my family's Holocaust survivors.
I talked to my father about the war quite a lot, and I don't think he was traumatized by it in any way. But then he wasn't a a glory hound either. Like, he never went to any Anzac marches or any of that kind of stuff. And, he didn't, I don't think he was affected positively or negatively, really. Well, probably more positive than negative. I don't think he was traumatized at all.
Yeah, right. So more of a personal question then.
In those days than they are now.
Yeah. Did that affect you then? Not like you're seeing him amass wealth from business and not spend it. Do you think you overcompensated or have in any way? Like,
I'm sure my parents would. I'm sure they'd say that. It's a shame to me that I'm not able to go around there and pitch them up because I know it'd burn up. Look, in 1980, just to give you an idea what they were like, in 1980, I bought a Corvette. It was secondhand thing. And we had a van for the business, which we used to go to and from the business. Corvette was just a fun car. But Ford had decided to build a car that was a bit like a throwback to the Falcon GT in 1980 called the ESP. And I'd ordered one of these cars, way back, cross knows. Anyway, I get a call from the Ford dealer one day saying, "Oh, you remember that Ford? Well, do you still want it?" And I said, "Oh, yeah, I get it." Anyway, I bought it, and my parents just totally flipped out. I can remember my mother saying, "You can't have two cars." Like my parents had a car each, and that was, yeah. So I don't know what they'd make of it now. They'd just be totally,
Did you know that you were going to be wealthy, like from a young age? Like, did you? Because it seems like what you said before is you didn't know you want to get into computers and all that. So
no, not at all. And look, for years, money was always a limiting factor. Like always, like it's sort of. I can still remember things like. I was only a kid, but in 1970, my father bought this Falcon that we sort of shared. And I remember he paid, I think, $3,300 for it, and the Falcon GT was about $4,200. And the gap from that 3.3 to the 4.2 was like insurmountable. You thought, God, we could never, just couldn't, And later on, look, it's only in the last sort of, 10 years or so that I've really had, in effect, tons of money. And I never had any real ambition to get a lot of money either. Like I said, I wasn't one of these child entrepreneur guys, and I wasn't really driven to get money. And in the business, we tried to run it the way you should run it, but the money is a byproduct. It's not the aim.
Do you manage your own money, or do you use like wealth managers? How does it work? I've always wondered that. Like, as someone who's into like financial planning, investment management, that's what I do, right, for a job. But like, I don't deal with obviously people like yourself, David. So I don't know how you make those decisions.
I don't. I haven't had to worry about it for the last 5 years because all the spare money's gone into road and cars. So there hasn't been anything left over. But I used to trade the US stock market, and I started in 1997. And I did that up to 2013. And especially for the first probably 10 years or so, I traded the markets every night and sitting in front of a computer. Then I wrote software to do it with computers. So, I know the US markets well. And if I had spare money, I am dredging up some spare money, and I am going to go back to the US markets, but I'm not going to trade them every night like I used to. I'll trade them a bit more long term, but I'd rather run my own money than give it to someone else.
Yeah. That was actually an interesting thing that I heard, and I can't remember the number. I think it was either 80,000 or 180,000. I don't know what it was, but in an interview, you said something like, I started with, say it was 180, and I had $3 million a few years later. And then I think, I'm just going off memory here, your old man said, how did you do it? And you just said you buy things that go up and you sell things that go down.
Yeah, that's all basically right. It was 180 grand. It took a year or two to run it up to nearly 3 million. I lost probably half of that or so in the .com crash, but I still came way out in front. And yeah, look, basically, it goes up and you buy it, and if it's going down, I mean, you've got to remember that markets in general go up most of the time. And all you've really got to do is avoid getting too severely punished when you get the pullback, and then work out how to get back in, because, they generally go up, obviously.
Yeah. So what we're appearing on right now, David, is on behalf of the Australian Shareholders Association, but it's also the Australian Investors Podcast. So it's like the biggest investing podcast in the country. So I speak to a lot of fund managers, entrepreneurs, CEOs, people like yourself, and I'd never heard a story like that. Like, you hear about them from, say, Jim Simons, who runs Renaissance Technology in the US or whatever. But I'd like to double click on this, if I may, because this would be like very interesting to the audience.
So you're basically doing like you were doing like a systematic trading thing, basically something that you could automate. And I'm imagining you were using like some type of signals based on price, volume, maybe even fundamental data.
It's all based. It was all really just done on price movement.
Simply price movement, right? And would your holding periods be like days, measured in days, hours, weeks, months? Like how short term is this?
It was a day trading thing. So basically, you try to be in cash at the end of the day.
Yeah, right. Did you learn any of this from someone, or like did you study this in any way?
No, it was another one of those self-taught things, I'm afraid. I read quite a lot of books on trading, but not so much books on how to trade, but books with interviews of guys who have traded successfully. But like I said, it's just not that complicated. I mean, it starts to move up, and look, in the period I traded, although it's not really any different, but in that period, the market was incredibly volatile, and it moves around a lot, and you trade shares. I traded mostly tech stocks, obviously, because I was a computer guy, and they move a lot. And all you really got to do is get in there, and it's not really that difficult. I don't think.
I feel like so a lot of the things. Sorry, go.
The problem you've got with the share market is that the fund managers and all these other guys, they need to try to make themselves look like some kind of guru so they can attract money. And the fact is, most of them can't beat the index. That's the reality. And they spend all this time, analysing stocks and looking for this and looking for that. And I read a lot of the analyst stuff on our company and whatever, and I just laugh because they just don't really know the company and they don't really know the industry. And I stopped going to the analyst meetings years ago because you can't tell them either. And it's all kind of amusing, to be honest.
Yeah, but I feel like there are many reasons for that, right? That there's they're very myopic, first of all. They're incentivized. The incentive structure is completely out of whack. And then you've got simply ignorance, of course, which we shouldn't look past. But I was going to say something like you seem like so you describe things as being very simple, right? And indeed, some of those things would be, maybe this is in the eyes of the beholder. You see these things and you think this is the essence of this problem that I'm going to solve. Would it be fair to say that you're smarter than the average Joe Blow that gets around on the street?
Look, who knows? I don't know. I did a few IQ tests when I was a kid, and I think when I was in primary school, they IQ tested everyone. And I think they did 2 tests, but I had to do 3 because I think no one ever tells you anything when you're a kid. But I think what happened was there was so much difference between one of the tests and the other one that I had to do another one all by myself but they don't tell you what the outcome is, so you don't really know. Who knows? I don't know.
Do you think? So, one thing that separates like entrepreneurs and even good investors and just people in life is like a variant perception, right? Like, there's the person that goes through the park and they take the pathway, and there's a person that just goes straight through the bush and tries to discover something new. Some people see the world differently to other people, and you seem to be one of those people. And I don't know why.
Yeah, well, look, I don't either, because the problem is that I just see it the way I see it.
Of course. I
often say to people that most people see the world the way they want it to be. I see it the way it is. I'm a realistic person and a rational person, but like I don't know how other people think. And look, I don't have a wide circle of friends or any of that kind of stuff, so I'm not in a position to even really know what the other guys think. And it's hard to look. Most people that are smart, or in effect, in terms of tests and that, they do well because they've got a good memory. Like, if you've got a good memory, you're going to do well in most sort of tests. But that's not intelligence, that's memory. And the intelligence is the ability to sort of, 1 and 1 and get it to 3 type stuff, that sort of see the possibilities and all that stuff, all that pattern stuff.
The other side of your brain.
I don't. Look, when Fiona and I were married and we were sort of together for about 20 years, we didn't really have any real circle of friends. We went to work every day of the week. And when we weren't at work, we used to go around to my parents' joint to watch the football. So you weren't exposed to a lot of stuff. And, I don't go to cocktail parties with people and, chat about stuff because I just don't do that kind of thing. So I really haven't got a clue, to be honest.
So you don't go to those analyst things anymore. Does it shit you? Like if I was to sit here and ask you questions about the most recent set of financial results and blah, blah, blah about the company, that would be, I'd imagine, not very stimulating for you?
No, I'm okay with it.
Okay.
Look, the reason I don't like the analysts is because they don't look at they've never looked at our business individually. They lump us in with the sort of the industry type thing, and that's the part that I don't like, because if you're going to be successful in business, it's competition, and you've got to be better than the other guy, and you've got to have strategies and execution that makes you better than the other guy. And they just don't. They either don't understand it, or they don't want to admit to the idea that some of the companies are better than others. Look, our company is just much better run than any of our competitors, and we've got the profits on the board over 20 or 30 years to prove that. Like that's not rhetoric, that's just a fact. Dicker Data is by far the most successful distributor in Australia and New Zealand over the last 10 years, if you want to talk about profits. Even in terms of sales, but obviously profits are actually why we're there. And, we're far ahead of the other. We deliver, net margins that are just better than what the other guys can do, and that's all there is to it. But the analysts just don't seem to understand that. Our shares should be trading way higher, for instance, than they are at the moment if you looked at it on performance, but we're held down because of the rest of the industry is having a bit of a struggle.
So you're thinking that people put Dicker Data, they put that in the same bucket of research as they put Technology One or insert name of other technology company, and they go, one has wide margins, one has slim margins, one has debt, one doesn't have debt. I don't know what Technology One has, by the way, I'm just guessing. But like that's what they do, and then they go, this one not good, that one better, type thing.
No, they just they don't give you any credit for being better than the industry. They just say, well, this is the industry. But the industry profit margin is 1 to 1.5%, and we did 2.5 to 3%. That's basically it. But we don't get rewarded for that extra. Look, I'll give you an example. We nearly sold the company to this Chinese company called HNA back in about 2000 and, God knows, 14, 15, something like that. I don't know, 17, 16. Anyway, it was going to be, I think it was $1.38 a share or some story. Anyway, they just bought Ingram Micro, worldwide. And so they decided to, in effect, throw the deal to the Ingram Micro M&A team. And the Ingram guys came back and said, you can't buy this company. These numbers are wrong. No one can make this level of profit. And, we've never done any accounting tricks or any of that kind of stuff And we've never tried to sort of optimize things to pay less tax. I mean, we pay the least amount of tax we can, but we've never done sort of tricky stuff or any of that sort of thing. And we've always had a completely open book. Like even with the employees, even in the early days, it was all pretty open. Everyone knew what the company was doing and everything. And now it's a public company. Obviously, everyone knows. So the runs were on the board, but they just wouldn't accept it.
So I think a lot of the industry, like the finance industry, needs like the spreadsheet, right? They need to go tick this box, put that in there. and they don't take a lot of things on faith because they don't have a way to quantify.
Yeah, that's right.
So,
It's all done on parameters, and no one's making it. Look, it's like when you go to the bank to borrow money. The bank's got a certain number of criteria that you've got to reach to borrow money, and that works out how much money you can borrow. They won't operate on the basis that, well, okay, we'll give these guys X, but we'll really keep an eye on what they're doing. They don't want to do that. They don't want to manage their loans. The bank doesn't manage the loans that we have. Look, yeah, of course we have a rep and we have all this sort of stuff, but they don't really manage the loans, even now that we're a public company and we deal with the institutional part of Westpac and that. So that's, and of course, because they don't do that, they basically make less money because they don't get onto some of those good things that might be a bit risky but could be good, because they just don't do them because they won't fit into they don't fit into the spreadsheet.
I actually had a guy called Joseph Healy on the show, maybe beginning of this year. He's the CEO of Judo Bank in Australia, and he talks about like basically the different C's of lending, and one of the things was like it's basically all collateral. It's got nothing to do with the character, which is a really interesting thing, and that probably happens more at the pointy end of like VC and equity type raise.
No, it happens.
Yeah.
I can remember going back to when I was only in the thing for 5 minutes. You go to the bank to borrow money. The first question they ask you is, do you own your own home?
Yeah.
Because then they'll be able to leverage against that. So they don't want to do any lending based on cash flow and management. They just want to do it on assets. And if you've got the assets, you can get the money, and if you haven't, you can't. And that's it. That's how they want to operate.
Here's a financial question for you, for the business then. How does it impact you if interest rates have gone up?
We make less money.
Okay.
It's as simple as that, because our business is operated entirely on borrowed money.
Yeah.
That's one of the structures. We dividend out 100% of the profit, and so we operated completely on borrowed money, because I think that's the way it should be done in terms of the whole whatever. So if interest rates go up, then you're going to, all things being equal, you're going to make less money. It's as simple as that. And you can't avoid it, and you can't mitigate it, because any saving you make in some other area to compensate, well, you could have made that anyway and made more money. So it's really quite simple. If interest rates go up, you're going to make less money.
What happens if interest rates go up? You guys go into a loss, and then the interest bill basically stacks up, if you understand what I'm saying. So the next refinance is bigger.
They'd have to go up to levels that they're not going to ever go up to before you were in a position where you couldn't make a dollar. When I say we're making less money, we're talking about maybe $5 million in a year.
Oh, right. Okay. Yeah, so very small.
We're not talking about 50. We're talking about 2, 3, 4, 5 million. We're not talking about, One
of the things that kind of allows the companies.
Another example to offset on that, right? We've always owned our own building. That's another one of the things that we've always wanted to do. Now, we built a factory out at Kurnell, and then we built another one next door because that one wasn't big enough, but we couldn't get it built in time. We sold the one we were in, and we rented it for about a year, and it cost $2 million a year to rent, right? Now, we built that factory for $24 million, and we sold it for $36 million. So we made $12 million on a capital gain from owning the building. And if we hadn't have done that, and we were there for about 10 years, we would have spent about 15 to 20 million on rent. So that's like a $35 million swing. So when you talk about things like the interest rates, then you have to take into account things like that, because the rent, like on the factory we have now, the rental on that factory would easily be, I don't know, be somewhere between 5 and 10 million a year. So that'd be 5 or 10 million a year less that we'd be making.
One of the things that seems to hang together for me with the business is culture. Like it's pretty simple. You said that before so many times. And I know when you set the business up, a big focus of it was having a workplace that was accessible basically for women. And I know there were in the early days, that was not necessarily a focus, but it was just something that you had, where there was more women in the business than men. I want to talk about incentive structures, but I want to do that separately. Can you tell me a little bit about like how you have fostered a culture that works for the business? Because if we're to take what you're saying on faith rather than on the spreadsheet, say for example, like we trust you, it's in the data, like you're right, 20 years of success, but we're basically saying we believe that what you're saying is true, it's proven out, but also we're going to take that as truth going forward. Can you talk a bit about that culture as like the way that that explains what you do so well? If that makes sense. I don't know. That's a horrible question, but I think you get where I'm going.
Well, look, with the employees, people go to work because they want to earn money. So obviously you want to. I've never been one of these guys that thinks that one of the keys to profitability is to squeeze down the wages as low as you can get them. I wouldn't like to be treated that way, and I just don't think it works well. I think that basically, if you pay people more money than they basically get elsewhere, they're going to work harder, and they're going to be committed, and they're going to just be more interested, and the net result is they're going to perform better. And look, we're in competition with our competitors, and our only measure of success is being better than them. And if you're going to be better than them, a lot of that's going to come from having better people. It's pretty obvious, really. So you pay people more money, you treat them better, and you give them sort of other sort of benefits. So the reason we started, well, look, I was married to Fiona, so there was just the two of us in the beginning, and she was a fantastic performer, and look, even when I go back to primary school, out of the top 10 smartest kids in the class, I think 7 or 8 of them were girls. So I never had that sort of, women are stupid attitude or any of that kind of thing right from when I was a kid. And we offered this sort of 9 to 3 type of working environment for, mothers who wanted to return to the workforce. And obviously it worked really well. Fiona could sort of pick up the slack before and after, and, it just worked well. So, we were giving people an appealing situation, and they'd appreciated it, and we were paying them well, and, whatever. And look, Fiona especially was very good at making that sort of internal culture where everyone's treated well, and it's sort of, you have functions and, all the other sort of stuff, and it's not like it's a grim Charles Dickens type of working environment. You know what I mean?
Yeah, I know what you mean.
So people can enjoy it, and, they spend a lot of time at work, so you want to try to make it pleasant.
Nowadays, you have the, I would say it's quite unique in that you have effectively a profit share based on profit margins and profitability, which makes a whole heap of sense when you think about how simple that is and how aligned that is for people. But you pay well, like your executives get paid good cash bonuses, which is interesting, right? Because if you listen to like the Buffetts and all those of the world, they're like long-term incentives and XYZ and blah, blah, blah. They do have a lot of skin in the game. And you've promoted a lot of those people internally. Is that something that other companies of your size get wrong? Like they they don't promote internally. They don't share the spoils of what we know moves the dial, which is money.
Well, look, the other guys just have much more rigid structures, and all our competitors are foreign multinationals. So all their structures are set offshore out of Australia, and so they don't have any kind of local sort of feel to them. And look, the guys running all those companies are mostly Americans or American-educated MBA guys, and so of course they tell you all kinds of stuff and blah blah blah. But look, I try to be a rational thinker and just think a problem through and get what I think is the right answer. And the reality is that if you want to incentivize people, in general, there's only two ways to do it. They either get to work less hours. That does work at the low end, but at the higher end, they get more money. And it's not even complicated, but I mean, who's going to bust their ass for nothing? I mean, I'm not going to ask someone to do that. Like, I feel that you should pay people well, and then you can push them. But the idea that they're just going to sort of do it for some, I don't know, it's just crazy town, really. And the way it's worked with our sort of top executive guys is they make way more money than they could get at any of our competitors. Like, far. And even our lower down management guys make way more money than they could working for anyone else. And yet we make more money than those guys as well as a company. And the reason we do that is because, look, if you want to get output from people, you've got to appeal to their self-interest. This sort of idea that, we're in a community or it's all shit, like it's and the academics and the media guys, they love it. That's why communism just sort of won't die. But it's just bullshit. I mean, you've got to appeal to people's self-interest if you want to get an outcome.
Yeah, there's only so many beanbags you can put in the welcome area or the whatever, right?
It's all garbage,
Yeah. Okay. So 2 more questions on this. One is, what would happen if you're not involved in the business anymore?
To be honest, in the short term, there'd be nothing would change. Like, I go to the board meetings every month, and obviously I check the emails every day, and I look at the sales figures every day. In the short term, nothing had happened at all. I think in the long term, I doubt that our ironclad adherence to sort of our core principles would be maintained.
Yeah.
And that would be the risk. But if they were maintained, then there'd be no issue. But I'd see that as the only problem. Because, look, it's very easy to say, oh, we need to change this, or we need to change that, or we can't do this, or we can't do that. And it's not easy to just say, no, we're doing it. Look, I'll give you a good example, and probably told you this story before because I've told it 1,000 times. I had this Chris Price guy working for me as a sales director. We were doing the Express Data deal, and before we basically pressed the button to go ahead and do the Express Data deal, I said to him and Mary, she's my CFO, yeah. I said, I want, what was it? I want 25 million in profit. It's either 25 or 30. I want 10 times inventory turns, and I want 5 million sales per head. And I think it was 30 million profit. And I said, if you guys are committed and you're going to deliver that, then we'll do it. But if you don't think we can do it, we're just not going to do it. So they were real keen to do it. So we did it. And we're in there and we're doing the integration. And Price brings me up on a Sunday night and says, oh, I've got to talk to you tomorrow, blah, 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 blah. Yeah, okay. So he comes in the next day and says, oh, we can't do 30 million. We can only do 25. And I just said to him, well, that's just no good. I'm just not going to accept it. Like, sheet of paper and all this. And I just pushed it back and said, no, that's no good. So he pulled out a paper from his bag to resign. So he resigned on the spot. And I got him to call Vlad up, who was one of our internal sales guys, and he'd been there, I think, for 5 years. I'd only, I used to say hello to Vlad every now and then, you know what I mean? And I offered the job to Vlad. Vlad took it up, and Vlad has proved to be a much better performer than Chris was, and we've even hired Price back to run a part of the business. But in that situation, most people would have caved and just said, oh, okay, and then when you do that on the important things, you just put yourself into a position where you're going to be screwed and you're not going to be able to get out of the hole. It's like the 2.5% margin. Like, everyone knows that the 2.5% is non-negotiable, that we're not going to do it if we can't get that number, and that's all there is to it. And we're not going to change that, and I don't care what anyone says, because that's a fair number that ought to be achievable, and if you can't achieve it, well, there's something wrong.
Yeah, that's a great. I haven't actually heard you say that. Maybe I have, but I can't. That's as someone who runs a business, I can appreciate that, and it's a slippery slope, isn't it? You kind of just start to fall off the side of that curve, and by the time you know it, you've got 1% margins or whatever the competitors have.
You can't get back. That's the real issue. You can't get back. Look, we bought Exceed in New Zealand, and their sales per head, I think, were 1.8. Our target is a number between 4 and 5, so 4,000 odd. So we have got it up to now. I think it's up to 2,600, and we'll get it to where it needs to be. But it's only iron-fisted determination to get it there that will get you there, because it's hard. If it was easy, everyone would be doing it. But the problem you've got is, if you don't get those kind of metrics, you're not going to get the outcome, because that's just the way it is. So you just can't you can't really compromise unless you want to get screwed.
So, okay, so my final question around this is, like, on the business itself. If I'm an investor, there's a lot of people that watch this or listen to this that would be investors in the company. If I'm looking from the outside and I don't get to see you chat with Chris or Vlad or do all those types of things, what things should I be looking for, or like to know if you've made a mistake? Is there anything does that make sense?
Yeah, well, the obvious thing is the numbers. Look, we have a quarterly thing, and if we're not getting the number, there's a problem. Like, I'll give you another example. We used to pay, we pay 4 quarterly dividends a year, and we used to pay the first 3 of them on a conservative number, and the last one would be on a higher number to get us up to the 100%. Well, last year we decided to try to get it so that all 4 quarters would be evenly balanced, so that there wouldn't be this sort of big uptick right at the end. I wasn't that worried about it, but Mary wanted to try to sort it out. Well, because the last financial year was a bit difficult, for the first time, we didn't make that number. So I think we were doing 13 cents a share the first 3 quarters, and we ended up doing 2.5, because we made basically the same amount of money last year as the year before. Normally we would have been up, but because of the COVID and all the other stuff, we couldn't do it. And our share price was absolutely hammered because of that decision. And obviously we're going back to the old way now. And they're the kind of things that you got to, look at. Look, basically, it's all about performance. You have to perform, and you have to get the number. And we've got a long history of getting the number. We've got an upward trending chart in terms of, sales and profits. And as they say in those ads, past performance is not a predictor of future gains, but what the fuck is? You know what I mean? Like,
yeah. I often think about that a lot, actually, because I feel like the only reason we have that in place is for people, because people are myopic. They're short-term focused. But eventually, it's a rhyming machine, right? Like it eventually starts to show something similar if you have a repeatable process.
Look, we listed our company with at 25. What was it? 20 cents a share. And even today, the shares are trading at, I don't know what it is today, but they're trading at 950 odd or something like that. And they've been as high as, $15. And there wouldn't be that many there wouldn't be that many shares on the Australian market that in that 10 or 12, 13-year period have delivered that amount of capital gain while also paying out a substantial dividend every year. It's got to be it'd have to be one of the better performing shares, I would have thought, over the last 10 years.
No, absolutely. It is.
But that doesn't have any real impact, certainly not on the analysts. They just don't see it. They don't seem to see that at all. Because they're always complaining about the 100% dividend. They're always telling us that we shouldn't be paying out 100% dividend. We should be, keeping some of the money and, just philosophically opposed to it. The reason we pay out the 100% dividend is because that's the best outcome for the shareholders. If you think about it, why wouldn't it be?
You get franking credits.
Well, just the whole thing. It's,
Yeah.
And our business is not tremendously capital intensive, so you can do it. If you're in a business that was very capital intensive, then you wouldn't be able to do it. You'd have to set a much lower number because you've got to raise that money, and you can do it with borrowed money, but sooner or later you've got to pay the borrowed money back. Although, when you're a public company, you can just basically raise that money by doing an issue, and that's one of the reasons I like the public company so much.
Well, that was going to be one of my questions to you, is why do you like the public company structure? But that would make a lot of sense, right? Because you've got an extra pool there.
Thing is, if you're a public company, your company's going to be worth 3 or 4 times as much as a private company. It's much more liquid. That valuation is a lot more certain as well. But the other real advantage is that you can issue shares. It's free money.
Yeah.
And especially if you think about it purely from an operational standpoint, it's just a complete total no-brainer. I don't understand any of these people that talk about going back to making it a private company. It doesn't make any sense at all to me.
I got a pointed question, which was in 2021, you sold some shares, and the stock, I was reading this in some article that I was reading, and there was a bit of, and I felt like the article that was written on this was pretty stupid, if I'm going to be honest. It wasn't from what you said, it was from what the reporting was. It almost made it such a big deal. But it fell 21% in 3 days after you sold some shares. And then you had to write a letter basically to say, hey, hold on a second, this thing's still, I still have this many shares and all this sort of stuff. But that would frustrate you though, wouldn't it? Having to put up with that, or am I wrong?
I wrote the letter because it was pissing me off. No one wanted me to write that letter, but I felt that I had to because it was just really doing, So yeah, look, last year when we had the bad dividend quarter, I got abusive emails from investors and all the other sort of stuff. But look, honestly, who cares? Fuck them,
Well, at the end of the day, I think most people, in fact, everyone should be taking comfort in the fact that if it doesn't perform well, if it's 21% in 3 days, it's a lot worse on you on paper than it is on anyone else, right? So.
Yeah, exactly. But that was only a temporary drop, and it went,
Yeah.
I mean, look, my shares are not worth anywhere near as much as they were a couple of years ago, and I've probably fallen off all the rich lists in Australia. I mean, I don't get the Australian papers, so I don't even know whether I'm on it or off, and I don't care. But, it's a long-term game, and I know that they're going to get back there. And look, our shares will get to $20 in the not too distant future, I'm sure. I think the economy will pick up next year and blah, blah, blah. And, we're expanding as usual and all the other sort of stuff. And it's look, our whole shares are Warren Buffett type of share. Like it's not that exciting. It's not that sexy, but if you sit on it for a halfway decent amount of time, you're going to come out in an exceptionally strong position. It's exactly the same.
So I just got a couple more questions, and then I could talk all day. But I guess back to the cars and to road and cars, the mission that you wanted to set out to do, one of them at least it seems, was to get the team in the F1. And we're recording this in late September, and the news came out this week that effectively you're not going to get your team in. And again, you kind of set the record straight. What does that mean for you to not have the team in the F1?
Oh, look, I only did the F1 bid because when the opportunities for this type of thing come up, you've just got to take them. Like, to give you an idea, and I didn't even bother putting this in the press release because it's not really relevant. That bid cost $500,000 and we didn't get it back. We had to lodge $500,000 with them to be in the thing, and we didn't get that back. So I lost $500,000. And I knew I was going to lose it if I didn't get back in. I was never confident that we'd get in, not because we didn't have a good bid, but I just didn't think we would from the political side. But when those opportunities come up, you just got to take them. That's it. You just have to, because that's just the way it is. I mean, and if someone can't understand that, then that explains why they probably didn't get where they wanted to be in life, because I had to do it because I just had to. And if you can't understand that, I can't explain it. But I'm not concerned because, as I said to all the people that I work with, I was really ambivalent about it, because if I got it, on the one hand, I'd think it was a fabulous achievement. On the other hand, if I didn't get it, I didn't have to worry about all that money that was going to have to be put into it. So I couldn't really lose no matter which way it came out. So at the moment, I'm relaxed because of I don't have to worry about all the financial stuff that you'd have to do it, which I could do, but it's a lot of screwing around, So yeah, I was always going to be fine. Like, I was depressed the one day when we got the email. It was a Friday. By the Saturday or Sunday, I was fine. It's like to lose, but
I'm very primitive in my understanding of this, but you were putting forward effectively the first female driving team as well, for a long time.
No, there's only been one decent woman in Formula One, and that was Lella Lombardi in the 70s. Most people weren't even born then, so you probably weren't.
No.
And we're only going to put one woman in because we got 2 seats.
Yeah.
But look, it's a no-brainer because I'd already had Jamie over here and tested in our cars. And I've supported Liam Lawson, who's also tested here, and another kid that we got racing in the UK at the moment. And she performed just as well or better than they did. So I'd have no hesitation in putting her in the car, and I wouldn't be thinking it was tokenism, because she'd be able to get the outcome in the right car. I'm absolutely sure of that.
Yeah, and I'll leave it to people's. Hopefully not their imagination. You can go and look up Road and Cars, what David's done there, and how that all fell, and the PR release that followed. But from my perspective, it seems like a big missed opportunity. Not for you necessarily, but for the racing body itself.
They made a huge mistake, of course.
yeah, but for more reasons than just self-interest, right? So
yeah, look. Look, I lay it out in the press release. I don't know if you've seen it, but
I've got it in front of me.
We provide a geographic diversity. Like, they call it a world championship. They don't have a single team from the Southern Hemisphere, and they're going to put Andretti in. Americans have won 2 world championships: Mario Andretti and Phil Hill. Australia and New Zealand have got 5. Alan Jones, Danny Hulme, and Jack Brabham won it 3 times. And as well, the McLaren team was started by a New Zealander. So we've got a heritage down here that really should demand that we have a team down here if you're going to talk about all that geographic stuff. And let's face it, outside of Sauber and Toro Rosso and Ferrari, all the other teams are UK teams. So 7 out of the 10 teams are UK teams, and Andretti's going to be based in the UK as well. So your argument that it's a world championship could be, challenged at least.
True or false? Are you the world's 5th largest owner of Ferraris?
I wouldn't have a clue. I've got a lot of Ferraris, but I think the only claim I'd have on the Ferrari front that would probably hold up is that I'm probably the only owner who's got a decent number of cars who's still got every car he bought new. But that only goes back to 2000 it goes back to 95, 96, but it really goes back to 2010. So there might be someone somewhere, but I think that'd probably be a fair thing.
Cool. Well, this has been wonderful to chat to you properly. We've chatted once before, but it was brief. Hopefully get to do it in person one day. If you do decide to resume trading the US equity markets and you achieve returns like you did before, can you please just send us all a message and say, here's the opportunity to be part of it? Because, mate, I got to say that's something special. I know that's not on your radar, but if you are ever doing that, let the rest of the world know, because it would be a great thing. But people,
I'm not looking to get those kind of returns, but you got to remember you got 2-to-1 leverage in the US market, so that doubles your return straight away.
True.
So,
True. People who are watching this or listening to this, please go and check out the business Dicker Data. It's on the ASX under the ticker symbol DDR. Heaps of disclosure in the quarterlies, the half yearlies, the annual reports. Take an opportunity to look at a business that is dominating its industry. If you're looking for one, this is one that you should be watching. And I hope this cleared up a lot of the kind of mystery around how the business is such a success. I know there's a lot of secret sauce, but this hopefully did some justice. So, David, I really do just appreciate you, mate, taking the time to join me on your